Hi, I'm Rosie, and today's video is going to be a couple of tips to hopefully reduce your self-employed income tax bill because let's face it, none of us like to pay our taxes. So the first tip, and this is probably a really obvious one, is to make sure that you claim everything as an expense that you can. So don't forget to add in things like your use of home. I tend to use the flat rate. Make sure you claim all your business miles and things like telephone and internet costs that you might not pay through your business account. My second tip, and this is aimed at higher rate taxpayers, is to contribute to a pension fund and to make sure that you let HMRC know that you have done that because you get additional tax relief on your pension payments. Number 3 is similar to number 2, and that is to make charity donations that are gift aided and put those on your tax return as well. Now, again, this only benefits the higher rate taxpayers, but if you're a higher rate taxpayer and you give money to charity, you can get extra tax relief on it. Number 3 is for those that are married, and that is to check to see if you can claim marriage allowance transfer. Now, this is when one partner is a basic rate taxpayer and the other person is earning beneath their personal allowance, and they can transfer 10% of their personal allowance to their spouse, so it can save a couple of £100 in tax. The next tip is to make sure you utilise any losses. So if you make a loss from your trade in 1 year, that can be rolled forward and offset against any subsequent profits. There are quite a lot of rules around this, so it is important to check that you're doing it properly. But there are various ways that you can utilise the losses. So in some cases, you can actually offset the loss against other income in the year. You can roll losses backwards. So it's definitely something that can result in lower tax if you do it properly and apply the loss in the most beneficial way. The next tip, I can't remember what I'm up to. I think this might be number 5, is to make sure that you claim any pre-trading expenses. So you can actually claim things for up to 7 years before you started trading, provided obviously that they are used for your business. So if you bought a load of leaflets or if you bought some tools but you didn't actually start trading till the following year, you can still claim for most of that expenditure. And my final tip, and this is one that you might not be aware of, is that you can use the trading allowance instead of your actual expenses if your actual expenses are less than £1,000. So again, there are some rules around this, but it's something that I do quite commonly for my clients. Is I will apply the trading allowance instead of their actual expenses, because in some cases, not always, obviously if you have a lot of expenses it won't work out better, but in some cases it will. So you can claim that instead and you might be able to save yourself a little bit of tax. So those are my tips of things to think about if you're looking to reduce your income tax. It's for sole traders in the UK. I'm a qualified accountant and I can provide these services as well. So if you've got any questions, if you've got any comments, or if you've got any of your own tips for saving money in your business, I would really like to hear it. So let me know below. Right, I'm Rosie. Thank you for listening. Bye.